Hello everyone, hope you guys are doing well. Whenever I open my LinkedIn account, I get a lot of questions about how to become an equity research analyst, what is the qualification required, what should be the education or background, what kind of courses one should undertake to become an equity research analyst, and what kind of role or work is involved when once you get into this field. So in today's video, I have tried to very concisely try to answer all these questions, and hopefully this video would be helpful for any person who wants to get into the field of equity research. Before we get into the intricacies of how to become an equity research analyst, let me give you a very brief description about myself. My name is Siddharth Dongre and I'm a chartered accountant, and I've been working in the field of equity research since 2014. So I'm well versed with preparing financial models and writing research reports, and I have worked for buy side as well as sell side clients. Prior to becoming an equity research analyst, I was working with Bombay Stock Exchange for around 1 year, where I was a teaching faculty for GFMA and BFMA plus programs. Now let us get to the main part. But first and foremost, you need to understand who is an equity research analyst. So equity research analyst works for both buy side as well as sell side firms. In detail, we'll discuss who are the buy side and sell side firms going ahead in the video. They are involved in producing research reports, doing the projections about the company's performance, and recommending about the stocks or particular industries. They generally do the following: okay? Performing fundamental analysis about the company or an industry analysis, financial and valuation modeling. Financial and valuation modeling is basically you prepare an Excel structure for the company where you forecast the financial statements of the company, and based on that forecasted values, you arrive at the fair value of the shares, so that you understand what kind of upside you can expect in the share. Okay, so that is one of the core works for an equity research analyst, preparing financial and valuation models. Obviously, another thing is financial statement analysis. Report writing is another major part of the work, where you write a research report and tell the story of the company and why do you expect the upside, backing the financial models that you have prepared, and tracking the progress of companies or sector. So, in a nutshell, an equity research analyst will do the fundamental analysis of a company, prepare financial models based on which he derives the value of the fair value of the shares of the company. Financial statement analysis and research report writing is one of the important aspects of his work. And then he keeps on tracking those companies for the quarterly earnings or yearly earnings, so that whatever story he is telling in the research report, that needs to be backed up by the performance of the company. That is why he keeps on tracking the progress of the company and comes out with quarterly report updates as well. So where do equity research analysts work? So as an analyst, you will be working in the research division of one of these firms. Investment banks, it could be an investment bank, it could be an insurance company, asset management companies, investment advisory firms. So these all have a research division within themselves, and this is where you would be providing your services as an equity research analyst. Boutique investment firms is another thing where they provide specialized services to a specific category of investors. And KPO is something that people are not aware. Even in KPO industry, you can work as an equity research analyst, where you would be supporting the analyst who is onshore, for example, US, UK, Switzerland. So you would be supporting them by being on by working with a KPO. There are two types of KPOs. One could be a third-party KPO, where you would be on the payroll of the KPO and you would be providing services to the equity research analyst onshore or on-site. And there could be an in-house KPO. For example, CRISIL is one of the examples, where CRISIL itself has a KPO set up in Pune, where you work with the equity research analyst or support the senior equity research analysts who are working on site. And that is why it is called as in-house KPO, because they are themselves managing, whereas our primary difference would be in a third-party KPO, you would be on the payroll of the KPO, while in an in-house KPO, you would be on the payroll of the main company on whose name the research reports are published. So you could be working in an investment bank, insurance company, asset management companies, investment advisories, boutique investment firms, and also KPOs. Now let us get into the technical aspect. As an equity research analyst, you could be working in a buy-side firm or a sell-side firm. Now, what is the differentiation between the two? We'll try to understand the difference. First, we'll discuss about the buy-side firms. So, either you would be working in a buy-side firm or a sell-side firm. So, it is very important for us to understand what is the difference. On the buy side, you'll be working with investment managers. You'll manage the portfolios and make investments to increase your clients' wealth. So this is basically dedicated towards specific clients, and you have to work within a given investment strategy. For example, the fund could be catering to only or would be investing only into large cap companies or small cap companies or a particular sector or any investment strategy. For example, more dividend yielding companies or growth companies or capital intensive companies. So according to the investment strategy, you would be working to increase your client's wealth. Okay. They make specific recommendations. Recommendations are made exclusively for the benefit of the funds that pays to them and are not available to outside the fund. So it's a very, you work in a very closed loop. Your information or your research or your recommendations don't go outside the fund. Because if a fund employs a good analyst, it would not want competing funds to have access to the same advice. A buy-side analyst's success or talent is gauged by the number of profitable recommendations made with the fund. Simply speaking, a buy-side analyst will take services of a sell-side analyst. We'll come to that part later. Buy-side analysts in general have broader coverage and responsibilities. It is not uncommon for fund to have analysts covering the technology sector or industrial sector as a whole. I mean, if you are working on the sales side, your scope is very focused. You could be working only on the industrial sector, and that too into a specific company's subsegment of the industry. For example, you could be only tracking the elevators company, whereas when you're working in buy side, you could be tracking the whole industrial sector as well. So your coverage is very large, and this is possible because your models that you prepare based on which you are forecasting the company's financial statements, and based on that you forecast the fair value. So the coverage, since the coverage is so large, these financial models are not that detailed when you compare it with the sales side analyst. So buy side firms use sales side services to make their investments. Hedge funds, asset managers, and pension funds are typical example of funds that buy or sell securities in the hope of earning profit. So ideally, frankly speaking, from the work perspective, buy side analyst coverage is very large. You could be covering an entire industry, and you could be picking companies which you like or whose prospect you like. So you could not be you're not laser focused on any subsector of an industry, and your financial models are not that detailed when you compare it with the sales side. Now let us try to understand the sales side of the things. On the sales side, when you're working in the sales side firm, with your research, you will be assisting the buy side analysts in buying the best securities for their clients' portfolio. So, sales side analysts will be providing the services to the buy side analyst. So, since they are providing the services to the buy side analysts who are recommending the stocks to their clients, your work has to be very detailed, and your financial models and the research report that you publish have to be very detailed, and the story has to come out. So a lot of research happens at the sales side. Sales side analysts are those who issue the often heard recommendations of strong buy, outperform, neutral, or sell. These recommendations can help the client make decisions to buy or sell certain stocks. This is beneficial for the brokerage because every time the client makes a decision to trade the stock, the brokerage gets the commission on the transaction, and sales side analysts are paid by the brokerage. The job of sales side analyst is to convince the institutional accounts to direct their trading through the trading desk of the analyst firm. The job is very much about marketing, and based on your if you are convincing the institutional accounts to direct their trading through the trading desk, you could come across various questions. So that is why your work has to be very detailed and your research has to be backed by the working that you do, and your research reports are very much in demand because people would be following your research reports. In order to capture the trading revenue, the analyst must be seen by the buy side as providing valuable service. Otherwise, the buy side analyst will not take your services. Information is clearly valuable, and some analysts will constantly hunt for new information or proprietary angles on the industry. However, it is important to realize that these analysts are paid by ultimately answerable to the brokerage and not to the clients. Furthermore, the recommendations of a sales side analyst are called as blanket recommendations because they are not directed to any one particular set of clients, unlike the buy side, but rather to general mass of the firm's client. So, work-wise speaking, from the perspective of work, a sales side analyst has to put in a lot of work because his financial models are very detailed, and his research reports has to be backed by a strong research analysis. A sales side analyst would be laser focused on a sub-segment of or a subsector of an industry. For example, he could be only tracking the elevators company, or he could be tracking only a specific part of the FMCG, because he has to put all his focus into the research, and this research is provided to the buy side analysts, whose models are not that much detailed. Okay, so this is the ultimate difference between buy side and sell side. So whenever you get an offer to work, you need to understand where you would be working, whether you would be working on sales side or you would be working on the buy side. What kind of qualification is required to become an equity research analyst? Most equity research analysts have a bachelor's degree in finance, accounting, economics, or business administration. So usually there is no specific qualification that is required to become a research analyst. There is no specific qualification that is compulsory to become an equity research analyst, but graduates in the field of commerce, finance do well in this field because they have a knowledge about accounting thing, which is the base on which you prepare the financial models of the company. You need to have a good understanding of finance. Hence, chartered accountants and MBA finance are preferred in the Indian market. Having a background in statistics and mathematics is also beneficial for equity research because there is a lot of number crunching involved in the job profile. In the 10 to 12 hours that you work daily in this field, mostly you will be surrounded by the numbers and you need to make sense from that number. So that is why having this quality also helps. And I fondly remember in my first interviews, one of the interviewer was an engineer. So I tried to suggest to him that since I am a chartered accountant, I could be more beneficial or would be well versed with preparing financial models. So he got offended in a way. So, but that is a different story. But nonetheless, being a CA or doing your MBA in finance would be helpful or beneficial. It doesn't mean that if you are an engineer or have done any other degree, you cannot get into this field. But you need to have inherent knowledge about commerce, finance, and accounting, and all those things. Because based on these things only, you would be working in this field. Okay, CFA, Chartered Financial Analyst designation awarded by the CFA Institute is recommended for analysts who want to move up the career ladder. But it is not a prerequisite. For example, if you have 2 to 3 years of work experience in this field, then obviously any kind of degree would not be compulsory, and your work experience would be good enough to take you ahead in this field. But if you complete your CFA, it could fast track that vertical movement in the organization. For example, if you do when you want to start your career into equity research, doing CFA would be helpful because the knowledge is specifically targeted towards finance, so that would be helpful for you. CFA level 2 cleared candidates are also preferred by companies who are hiring into the equity research. So what you can do to get into this profile, I would recommend get basic understanding of stock markets and understand the right way of investing, because that is inherent to getting into this field, because you would be basically trying to understand how the share price of the company moves, what are the things that move the share price of the company, and understand the right way of investing. you can check out my course that covers all the basics of stock market and value investing. The link is provided in the description. And secondly, get a basic understanding about accounting standards, because you would be creating financial models based on accounting standards. Again, financial models are a structure created in the Excel, where you forecast the financials of the financial statements of the companies, and based on those forecasted numbers, you would be arriving at the fair value of the shares, and on that fair value, you would be recommending whether the share is a buy or a sell, and what kind of upside can be expected in the share price, current share price. Do a financial modeling course. They will teach you how to prepare financial models of a company. That would be very helpful for you guys. As of today, I haven't created any course till the time I'm recording this video. But if it is updated, if I'm able to do this course or record this course, then I'll update it and add in the link below. The best way to, and another best way to get into something is just start doing it. There is virtually no cost in it. To start looking for investment ideas and performing your own valuation models for the companies. Another thing that you can do is start reading a lot of books. There are various books that you can start reading. One would be One Up on Wall Street. Second would be An Intelligent Investor is a must read. So get a basic idea or understanding about how the stock market works, what could be the movers, try to start your own investments, get into do a financial modeling course. Because theoretical knowledge is one thing and another would be practical knowledge. These are very two different things. So you need to get theoretical as well as practical experience. So I highly recommend start with the stock market, basic of stock market course, and read a lot of books and do a financial modeling course. That would be very helpful for you. So once you have done all these things, what all things you can do is think about an industry that you are interested in and finalize the company you wish to analyze. Okay, these are the things that you can do when you are at home. For example, you have completed your financial modeling course and everything, got the basic understanding. Then what you can do is pick up an industry or a sector you are interested in it and finalize a company that you wish to analyze. Put all the numbers in Excel, link all the three statements, start performing the analysis. That is, prepare a financial model, analyze the historical results, build a financial forecast, and be thorough with the concepts of accounting standards, valuations, and Excel, because you would be then doing the DCF analysis, and all your financial models are based on accounting standards, your knowledge with the Excel report writing, and your DCF analysis. Another thing that I would highly recommend is write a summary report based on the financial model that you have prepared and carry this to the interview that you are going to. Because if you show them your research work, the report that you have written, and show them the financial model to the company, they would get a clear understanding that you understand the mechanics of preparing a financial model, and you are able to analyze the company in a better way by when you write the research report. So you can refer to other broker reports on how the research reports are written. Obviously, the formatting and all that you would not be able to understand, but at least try to write the story based on which you are telling that the stock should rise going ahead. So writing a research report is very helpful. Carry that research report and the financial model with you. Financial model you can mail to the interviewer. Carry the research report that you have with you to the interviewer and tell them that you have written this. So this would be very helpful for you guys. Okay. Apart from this, I get a lot of questions whether they need to do a data analytics course or a Python course. Well, as of now, the automation hasn't really taken up the role in financial modeling as it was expected, but not having knowledge about Python or data analytics is okay. You need to have an understanding about Excel and the formulas that will be taught in the financial modeling course. And another thing would be that in this field, the working hours are very long, so you might not have a balanced life, but you have to put in a lot of effort before you get into this industry. You need to understand that the work-life balance could not be there, at least for initial 5 to 7 years, till you get a good understanding about how to work, what data needs to be analyzed. So everything gets streamlined in 5 to 7 years, but work-life balance is very much skewed. So this is another thing that you need to understand. Hopefully all these pointers were helpful for you to understand on how to get into the field of equity research analysis. What is the work of an equity research analyst? What is a buy side firm or a sell side firm? What is the qualification required? What kind of exercises you can do to get before getting into this field? Okay, so hopefully this video was helpful for you guys. As you are aware that I am working in the field of equity research and I don't get too much time into preparing the YouTube videos. So it would be very helpful from you guys if you like, share and subscribe to this video, and hopefully I can bring a lot of such videos going ahead as well.